moving average. Okay? They are your support and resistance. So they are very important. Yeah. So we have the ribbon, we have the REMA, the baseline, and the EMA 50 and EMA 200. I only use the EMA 50 and the EMA 200. All right. I only use these two lines to determine the trend. Okay, whether it's the price as support as an uptrend or the price is going on a downtrend. Only these two lines. The rest of the lines you see on the screen is for trading, for swing trading. Okay, the ribbon and the REMA line, this is for swing trading. Okay, you enter a trade blue color, right? So you enter this kind of trade here. Okay, so you will only want to enter a buy when you see the movement is like that, the color of the ribbon. Close this one. Okay, never mind. Okay, so you need to enter when you see the ribbon, all right, is green color. Yeah. So you want to exit the trade when the ribbon becomes red color. This is the your trend indicator, right? You want to enter a trade when the trend is moving up. You don't want to buy when the ribbon is red. There's a pullback. Okay. So like this market now is going through a pullback. Right? We see now. Okay, this is day. All right. It's going through a pullback now. You can see on the 1 hour. It's still below the baseline. Okay. Right. So you see the price now. This gray color line. Okay. This gray color line. This gray color line. This is called the baseline. Okay. So this gray color line is a baseline. It will become a resistance. Right. The price. This line is blocking the price from moving up. Okay. Even there's a signal here. All this gray signal. All right. The arrow becomes gray color. The gray color, you see, it shows you that this price, there's a rebound signal, but under the gray line. All right, it's a weak signal. It tells it's a weak signal. All right, but sometimes it can rebound up, like somewhere around here. This one it can have a strong rebound, and sometimes sometimes here you can see some strong rebound. Somewhere here, this one. Okay, this is a gray little signal here, gray color. Okay, but this one it can rebound. Yeah, sometimes it can rebound like that. Okay, so this is I'm looking at the crypto Ripple. Even the gray signal is quite strong here, right? In this kind of a strong support level, this is a very strong support. So on a strong support level, it can rebound and break out. It can break out the gray color line, the baseline. So the baseline will become blue color. It turns blue color, right? So this is a very strong move in a 50 minutes time frame, right? So by looking at the signals here and follow along by the rocket fire signal appear, okay? And then you see the blue dots here. The dots become from light blue to dark blue, right? The dark blue is the strongest one, is the markup level, yeah? And when the price comes down, the dot will also change color, right? Become a gray color. Okay, sell becomes red color. Red color is not so strong. There's a resistance. Right, so all these lines are important. Yeah, the ribbon and the REMA, right? They are important. Yeah, and they are important as your support and resistance. Yeah? Even the rocket fire with the green line, okay, to indicate that this area here that is a bullish zone, right? The X with the red line, this area here is is a bearish zone. It's bearish, yeah. Okay. So we want to take a trade when we see the rocket fire. Let's say, okay. So we only want to enter a trade when the price is within the rocket fire zone. Okay. So when you see rocket fire, okay, when you see rocket fire, the price is a strong, all right? It's a high chance that the price can move up, okay? And with the help of the moving average, the EMA, right? The EMA also cross up, EMA 50, EMA 200, it crosses up, right? So this is a strong trend, all right? If on a downtrend, let's say the price is moving on a downtrend, let's go to the lower time frame. Let's say the price is moving on a downtrend, a downtrend. Here, right? So the price is all below the EMA 200, okay? The purple line, yes, yeah, the purple line. This is the purple line. This is the purple line, yeah? The purple line is the EMA 200 line, okay? So the candles are below this EMA 200 is a downtrend, okay? There's a rocket fire here, can enter, all right? You can base on this signal to buy, to enter, but the price will move up, and then it hit this level here, the EMA 200, break out a bit, then it come back down again. Okay, there's a false breakout here. All right, one breakout and then one breakdown. Okay, so there's no real breakout yet. So there's a risk. If you buy here, you need to take this as a resistance area where you need to exit, get ready to exit there. If there's any breakdown here, right? So in this case, there's a breakdown here. All right, so you enter here, then you need to exit here. There's a breakdown here, okay? Okay, so it's important to use the EMA lines, the EMA lines. Okay, in my BMS chart, I have this EMA 50 and EMA 200 enabled. Okay, so the EMA line, okay, like this. If the candles are below the candles, okay, if the candles are trading below these two lines, the EMA 50 and the EMA 200, this is you consider a downtrend. Okay, so if the price were to move up, all right, you will need to notice this area if there's a breakout of the resistance. Okay, if there's no breakout, then the price will eventually come back down. Okay, you take this as your guide of where the resistance, the EMA, right, is the resistance. Okay, and if the price is moving above, all right, and then the EMA line is here, and then the EMA 200, the purple line is here. Okay, this one, with one look, you know, is an uptrend. Okay, the price will have to come here, then rebound here, come here, rebound here. Again, let's say you take the EMA 200, okay, on a lower time frame, the price move up, come here and then rebound, move up, rebound, move up, rebound. All right, so that means you can see the price basically respecting the EMA 200 as a support. These are your support area. So take the EMA 50 or EMA 200 as your support or resistance. So take note of that. Okay, it's very important. That's two lines is very, very important. Yeah, the purple line and the blue line. Okay, this is how a typical normal chart will look like when you plot this based on the 4 EMAs, right? So in my BMS chart, I don't need the EMA 9 and EMA 20, okay? Because it's already been replaced by the ribbon and the REMA line and also the baseline, right? This 1, 2, 3 already good enough to replace the EMA 9 and EMA 20. So I only need the EMA 50 and 200. All right, so this moving average will help us in our trade. Okay. All right, let's move on to other things there. Uptrend, downtrend, support, resistance. Vincent, the EMA line trend to determine by the banker or who? Okay, I don't quite clear about your question, okay, but you try to ask. I try to figure out the EMA line. Okay, I want to make it clear. Who domain? The EMA line it's not about the banker or who. Okay, it's nothing to do with the banker or who, right? The moving average is just the EMA, the exponential moving average is the moving average of the past trading days. Okay, it's just the moving average of the past trading days. You can set to 9, 20, 50, 200, this kind of thing. These are quite standard universal settings. All right. So we'll just plot the lines on the chart. Now, no one can determine who. Okay, banker, of course. All right. Now I understand. Okay, of course, a banker, right? Banker will trade according to the EMA lines. All right. They will use the EMA as their guide as a banker, right? The bankers, they cannot simply trade anything, right? As a banker, they have a set of rules in trading. They can only trade some selected kind of stocks. Hold on, Jenny. Okay, as a banker, as a banker trader, they can only trade a certain type of stocks in their portfolio, right? They can only trade the KLCI stock with fundamentals, with some PE ratio, this kind of thing. They cannot simply trade any kind of stock, all right? And they must have a guideline to trade only stocks that have the price above the EMA 9, the EMA 50 or EMA 200, right? The price must be above the EMA lines. They cannot simply trade something that's on the downtrend, this kind of thing, yeah? So they must follow certain SOP in their trading, right? It's not like us, we retail traders, we can trade any kind of thing, all right? You can trade any sort of stock out there. Whatever that move you trade, right? You don't care, right? So that's the difference between a banker and retail traders. You can trade all kinds of things. Okay, let's someone. So no one can control the market, right? It's actually the market forces, yeah. Okay, just remember, no one can predict the market, and no one can control the market. It's all determined by the supply and demand. Going stock, you won't see. I don't know lah. I don't see banker will get going stock. Okay, it's mostly by the syndicates. Okay, maybe by the dealers themselves, right? Okay, if you look at the funds report, all this thing, the bank give you the growth stock, the report, they will give you the portfolio of stock they have the position inside. Okay, the bankers usually what they do is bankers they do portfolio balancing. Okay, they have a set of stocks in their portfolio and then they balance each out of their profit and losses. Right, so they have come out different funds. They have growth fund, they have aggressive fund, they have index fund, income opportunity fund, this kind of funds, and they put in different kind of asset or stock inside into the portfolio and balance it out. Right, they don't really do this kind of trade or borrowing, this kind of thing. Right, the bank they don't play their fund, their client funds. Yeah, so they need to follow the SOP. Certain groups they need to trade different kind of stocks. Different groups they trade a commodity, different group they trade gold or silver, this kind of thing, and different asset class. Yeah, so they are divided into different asset class to trade, right? Then they must follow certain SOP guidelines. All right, only we retail traders every day we can jump in and trade any sort of things. Okay, let's look at what now CTOS. Everybody look at CTOS. CTOS. CTOS gaining attention, this IPO, right? So new IPO. Now we can't see much on CTOS, okay, because it's an IPO, right? There's not much historical data, right? So we look at just now the using the EMA, okay, daily time frame. Okay, so on an IPO, all right, on an IPO is a new stock, right? There's no historical data, right? That's why if you see the chart for CTOS, you can only see the EMA 9 and the EMA 20. That's it, the red and green. The 50 and the 200 line won't appear on the chart because there's not enough 50 to 200 days of historical data to plot the moving average onto the chart. That's why you cannot see, right? There's not enough historical data. So it's to trade CTOS, it's just based on the flow. All right. Last Friday, the CTOS, the price move up in just one day. This is a good trade, okay? So if you capture CTOS, you can capture just one nice trade like that. This one trade like this already good enough, right? This one day already good, yeah. So because we see the price already pull back, it's a flag pattern, right? Flag pattern, something like that. Okay, so we can see a flag pattern here, and then there's a breakout of the flag pattern. All right, and we can clearly see this is on an uptrend. All right, so we cannot use any moving average here at all. Is we can only rely on price action, right? This is really have to do on candlestick patterns and price action trading to look at this. So it's a rebound, pullback, right? It's a flag pattern and then there's a breakout, right? So anyone capture this will be a good intraday trade for this long candle here, right? So we'll expect the price may pull back a bit, right? Before it continue to rebound up higher, right? Or maybe already reached the high price, the peak, we don't know, right? Already at the high price, yeah? Okay, what else? A breakout, all this, yeah? So breakout, sometimes all this breakout, we will encounter bull trap. Bull trap is because there's a fail breakout, yeah? Bull trap is because the breakout fail. Sometimes it can fail, right? So in trading, there's nothing 100% guarantee. Yeah? You can see it's higher lows, right? The price moving up, all right? But there's a fail break and then the price drop, okay? So there's a risk in trading breakout. Whenever the price breakout, all right, we must be careful of this area whether it can support or not, yeah? All right. Some of the move like this is overextended, right? If the rally is too strong, it's overextended, then it will eventually the price will can plunge down like that. All right. If it's too strong, overextended, yeah. And parabolic, right? Parabolic is one straight line up. Okay. Parabolic is also not sustainable. Right? It can drop very fast. Whatever that move very fast, yeah. Okay, remember, if the price move up fast, very fast, very quick, in just a uh, half an hour like that, all right, move up fast, the price move up very fast, just like that, wow, shoot up like that, okay, move up very fast like rocket like that. It's very risky, okay, because the price cannot sustain you, it will drop down very fast, all right. This kind of move, it cannot sustain on the high side, okay, it's very risky, it will drop very fast. K and M, okay, whatever you see whatever you see on the chart, especially in the morning, in the morning, when actually in the morning when the market open is very unstable. All right, people are very unstable. You move very fast. Oh, FC, you can try because my BMS indicators, right, works on trading view. All right, if you can see whatever that's on trading view, you can trade. Okay, okay. So trading view, you can be using BMS to trade a Bitcoin. Okay, we are looking at the Bitcoin. This is BMS, right? BMS indicators, all right, works fine, all right, works good accurately on a Bitcoin, right? You can choose whatever. There's a futures, I can't see this, all right? You have to try, right? I don't know, right? Because I don't trade futures, right? We only trade Bitcoin and stocks. Whatever that you can see on trading view, then you can trade. All right, because my indicator works on trading view, right? Whatever trading view offers, you can trade, yeah, right? I don't know what platform you're using, okay? So as you can see the chart on trading view, that's okay. All right, I can't comment much on futures. A lot of people ask me futures, but I don't know, right? If you can see it on trading view, then it's fine, yeah, you can use, right? Okay, just now I talk about something that is fast, so it cannot sustain on the high side because there's no logical support on each level, right? This is too fast, it's a parabolic move, right? It's too parabolic, yeah? When do you use some ID VWAP? ID VWAP is when I want to do on a 5 minutes, yeah? When I look at the 5 minutes time frame, okay, and I want to do scalping, then I will switch to ID VWAP, right? Because I want to trade using the VWAP line, okay? All right, I want to trade on using the simple EMA line and VWAP line as my two moving average. This work on 5 minutes time frame for scalping. Okay. If you don't do scalping, then it's okay. You can just use the BMS indicators, right? Up to 15 minutes is okay, right? 15 minutes, the BMS signals still work, right? They still accurately plot the signals, right? So we are trading like a Ripple. Okay, this is a Ripple on a 15 minute chart. As you can see, the indicators are working, all right? They are correctly plot the signals onto the chart on a 15 minutes time frame. So it's still okay, yeah? Right, as you here, the signals appear here. Okay, it move up, right? Okay, so we do not chase the this kind of fast parabolic move like so fast, so it will drop down very fast. Okay, so what we want to chase is those that are moved slowly. Okay, always remember on the 45-degree angle, right? 45-degree angle is not too fast. It's on an uptrend, right? And we want to see levels of pullback. Okay, pullback or levels of digestion and then move up, digestion, and then move up. Yeah, so there has logical level of support to move up, to push up the price. Okay, not to chase anything that's moving very fast. Okay, surge in this kind of thing is, yeah, okay, a sudden surge, right? Pump up very fast, right? Almost like 90 degrees parabolic, and then it will drop back down very fast. It will form a shape like this. All right, this is not a good pattern. It's a pump and dump, right? So we never want to chase this kind of move, right? This is a V shape. Okay, sometimes the price can plunge down, okay, and then it can rebound back very fast on a V shape. This is called a V shape recovery. Yeah. All right. If the price were to drop down very fast, okay, if you notice a candle, a red bearish candle that suddenly drop down very fast, okay, then you can expect if the buyers were to step in on the same day, okay, then it can push up this candle very, very fast and push up, and then it will become a hammer, okay, it can become a hammer like this, all right, or the next day, all right, you see a red candle come down very fast, and then we can expect the next day there will be a rebound, okay, a rebound like that, okay, a rebound, yeah. So because the sellers can also be oversold or exhausted. When the sellers are exhausted, then the next day the buyers will step in to buy back the shares. Okay, if there's no problem with the shares, just like this one, okay, just like this stock, okay. So you can see two candles down, all right, heavy selling. So the next day, the buyers step in and buy back. Okay, so you can capture this kind of move. You notice this kind of heavy sell down, right? And then you have to see the next day when the open is green, the price pushing up, then you can enter here to do a fast trade here, or to do a BTSD also can, right? This can happen. A fast down will have a fast push up rebound. Yeah, okay, it's a recovery here. Like this one, yeah. Like this one, you can see there's a long push down here, all right? This one, okay, this is also a good trade. Okay, if you're able to notice this move during the market trading, all right, this is a very good trade. Yeah, the price actually dropped down to 60 cents and then push it back up to and close at 89 cents. This is a very big move. All right, this is what happened during the day. Right, it formed a long dragonfly doji, right? This is what happened during the day, all right? The candle pushed down very fast, created a long red candle, okay? And then the bulls step back in, push back the price up, push it back, okay? Push it back, okay? But the price didn't close higher. It just closed here, like this, okay? But at least if we're able to enter this trade, right, we already able to capture this kind of profit, all right, in this just a 1 day trade. Yeah, just to buy inside here. All right, this, if you look at the tick chart, the smaller time frame, the price actually come down, all right, and then push back up very fast. It's a V-shaped recovery in just 1 day, like that, very fast. Okay, so sometimes we can spot this type of opportunity to trade like this. Yeah, all right. Okay, what else? Supply and demand. Okay, price patterns. Yeah, so I'll go through some fast price pattern for your general understanding, right? Okay, let's look at the ascending triangle. Sometimes the price can form a triangle like that. Okay, a triangle, yeah, a triangle, and then the price can break out. So it's called ascending triangle formation breakout. Okay, the lower highs. Okay, you can see the lower the lows are getting higher. It means the support is pushing up the lows, right? But the resistance, the top here, remains the same. That's a flat line. Okay, but the buyers are pushing up the lows. That's why it create a triangle like that. Okay, so if there's a breakout here, it's very strong and will eventually will move up. The price will move up. Okay, this could be called ascending triangle. Yeah. Next, the opposite is descending triangle. Okay, the price is pushing up from above, making a lower highs. Okay, lower highs, lower highs, lower highs, but the support remains the same, flat. It's a flat support. Eventually, this is the level that you can break down. The breakout, right? The neckline. Okay, breakout here, then it will goes down. Okay, so this is called the descending triangle formation. Yeah. This is symmetrical. Symmetrical is going into a tight corner. Yeah, the price move and compress into a tight corner, into a tight triangle corner, right? This kind of corner, we want to expect a breakout, or sometimes it can be a breakdown, it can be neutral, right? Sometimes we call this VCP, volatility contraction pattern, right? The volatility of the pattern is going to a contraction, going to a tighter and tighter small triangle area. All right, if able to break out, then it's a symmetrical triangle breakout. Breakout then is a strong move on the uptrend side. Okay, so three triangles: ascending, descending, and symmetrical triangle. Yeah. So sometimes you can see this kind of triangle on a pennant. We call a chart pennant, right? The price move up and then it pull back into a pennant and then it's break out again. Okay. So it looks something like this, the pennant, yeah. The pennant can look something like this, like this. This area, okay, let's see this area, something wrong with the pen. This kind of areas, okay, this is not so clear. Some sort of this area, something wrong with the pen. Okay, so it's some sort of this area, that's called a pennant. Okay, it's basically a short-term pullback, a very short-term pullback. See, right? You notice this area, it has some sort of a short-term pullback, but it's actually going up. It's moving up. Okay, it's a short-term pullback. So it's always the price is always moving like that. It move up and then has a short-term pennant and then move up and then move up and then move up like that. Okay, these are just short-term pullback. Yeah, these are the kind of uptrend price movement. It's called a pennant. Descending triangle sometimes can also break out, right? Descending also can break out. If break out is also good. Break out can move higher. Okay, so some other patterns are like W shape. This is a W shape. Yeah, W shape is like a double bottom here, right? It can also break out here, then break out, the price can move up. Right? We're looking at the price formation patterns. Double bottom, right? Double top, right? Double top is a M shape. Okay, M shape is a double top. It's like two mountains. So this is kind of a bearish kind of pattern. It break down, then it will go down here. Right? Double top. Head and shoulder. So head and shoulder is also a kind of a M shape, right? It looks like this. Okay, this is called a head and shoulder, right? This is the left shoulder, the right, and then the head. Okay, so what's going on in the head and shoulder is basically the buyers are trying to push up the price. Okay, the buyers push up the price, there's a pullback here. Okay, this is the neckline support. Okay, this line here is we call it the neckline support. There's a neckline here, support here. So the buyers are trying to push up the price, and then there's a rebound here. And then here it start to rebound and have a strong rally up. Okay, the price have a strong rally from here, from the neckline, strong rally up, and hit the head here as a resistance, right? And hit the resistance, and price starts to pull back to the support area, to the neck, and second attempt to push up, not even to push up, all right, to back to this level. It just stop here, and then it come back down, all right? And will form a head and shoulder. This is a very bearish kind of pattern on the price chart. It tells us that the buyers are already exhausted. They have no intention to push back the price to this level. So they just want to stay here, or sometimes it can break down the neckline. It can break down here, and then it will become all bearish altogether. All right, so there's a chart like this. Last time we saw this one of very obvious kind of head and shoulder. You can use the line, right, to see the pattern. Yeah, you turn from candlestick to line, then you can see the pattern clear. So you can draw the neckline somewhere around here. Okay. Okay, so you clearly see this head and shoulder pattern. Yeah. Okay, the left shoulder and right shoulder, this is the head. All right, this is a head and shoulder pattern. This is the neckline, the breakdown of the neckline. And then there's a second time a breakdown of the neckline. There's a 2 times it break down. This is the first time it break down. Second time it break down of the neckline support. Okay. After the second breakdown, what happened is it all becomes a downtrend stop. all becomes downtrend. Okay, it becomes like this, downtrend. All right, this is Hatha Lega, right? One of the top strong fundamental growth counter. It becomes like that, downtrend. Okay, so yesterday there's a member who asked me, okay, there's a good question he asked me, right? So he asked me what I think about the Bursa, okay? What I think about Bursa, the Malaysia stock market, because he doesn't trade the stock market, he trade other type of things, he trade other type of asset class, okay? So what I can comment on the Malaysia stock market is Goring market, okay? Goring market is a one-day show, okay? So you have to trade, you have to do scalping, you have to do scalping day trade kind of thing, right? And overall, the KLSE is a bear market. It's still going down on a bear market. It's not bullish, right? So we can't really trade hold long or swing this kind of thing. It doesn't work, right? You can only do some short-term trade scalping here and there. It works on a daily basis like that to make some quick profits. Okay. So if you talk about fundamentals, fundamentals in the Malaysian stock market, I can say it's koyak, right? Fundamentals doesn't really work, right? So all these value investing, all this thing in Malaysian stock market doesn't really work. It only works on some counters, one or two technology stock, right? It's like these technology stocks in Malaysia, like a Genitech, High Tech, Kobe. This kind of thing is considered as a super stock, right? Can consider as a super stock already, right? The price can suddenly go up very high one, right? But the fundamental is not really strong there. But it's just a technology. It's like become a super stock in the Malaysia category, right? So you can actually do some investing in this kind of thing here. All right. So the rest of the stock in the Malaysia stock market, right? Like glove stock, right? You look at the glove sector, Top Glove, all this thing is pretty fundamentally is strong, but technically is koyak, right? The sentiment is not there. Technical is not there, right? So you can't do much, right? You can do some maybe one day ready, then you can buy, okay, then that's it. Tomorrow no more already. Okay, this is the situation in the Malaysia stock market. Okay, so even though my BMS signals, all right, were prone to generate some false signals, even if I really apply the noise filtering to make it less noise, this kind of thing. There are still false signals because the whole Malaysian market is all goring and a lot of pump and dump, right? A lot of pump and dump. One day up, then next day down, this kind of thing, right? So even the signals can give you false signals, right? So the signals can work well. All right, we have tested the signals, right? The BMS signals works well in crypto market, okay? Crypto market and even the US stock market, right? Because this kind of market is very different from Bursa. They have a high volume, okay? They have high volume. The stock or the movement of the asset is not easily manipulation, right? Not easy to manipulate. You cannot manipulate. There's no manipulation, right? So it's a very big market. A lot of people are trading in the crypto and US stock market. If the market is uptrend, it means uptrend. All right. If the crypto or US stock market is uptrend, is bullish, it will go up, right? If it's down, then you will show down. You won't have up and down here and there, right? One day show no, right? So this because the Malaysian stock market is in this kind of situation. That's why if you can survive the Malaysian stock market, you can survive in any market. Okay, you can trade in any market. It will be very easy. All right, with the help of the BMS signals and indicators, it's very easy to trade the US stock market and the crypto market. Okay, you can survive the Malaysia stock market like that. It's so unpredictable of the Malaysia stock market. It's so the Malaysia stock market is so very dramatic. It's a political driven market, right? Anything news came out from the political side will affect the stock market. All right, then your holding of your investment all will go down. All right, so it's very difficult. A lot of people go into the Malaysian stock market, right? one or two trade, they make losses and then they just give up, right? They don't trade. All right. So that is what happening to the Malaysian stock market, yeah. And as you see, a lot of flows are flowing up into other type of markets, right? So that's why the Malaysian stock market is also now very low volume, right? It's experiencing very low volume, yeah. No more the bullish kind of market. Only one or two selected counters in one day that can move up. All right. This is what happening to the Malaysia stock market. So we can just do some trade like that, yeah. Okay, so the head and shoulder is a bearish pattern, right? Come back to here. So the opposite is inverted. Inverted head and shoulder is bullish. The breakout then is a move up, right? Inverted, right? So you can refer to the slide. So this is the reverse, the referral chart. You can refer to all these patterns. Wedge, right? Falling wedge. Wedge is something like that. All right. It moves down. Okay, it moves into a tight corner. That is called a wedge. A falling wedge, when the price break out from the wedge, it will be bullish. Right? This is called falling wedge, right? So it looks something like a flag pattern, but the flag pattern comes down in a parallel line. These are patterns. Patterns. The difference between a wedge and a flag pattern. Okay, a wedge is something like this. This is a wedge. A flag is something like this. A straight parallel line, okay? But they are almost the same, right? The objective is, if there's a breakout here, there's a breakout of the flag pattern, then is bullish. Okay, so we can see this kind of pattern in intraday or daily or whatever. You see this kind of pattern. If there's a breakout of the flag pattern, then is bullish. This can be an entry, bullish entry. Yeah. Okay, so the this is something like that, a flag pattern on a smaller scale, on a smaller time frame. Yeah, right. The opposite, always there's an opposite, bear flag, right? Bear flag is when the price, okay, bear flag is something like this. When the price bearish, right, move down, it will start to rebound, okay? It will start to rebound like this, bear flag, okay? So it will start to rebound. So if those traders who are unaware of the bear flag, they will actually buy here, right? They will make a buy order here, buy to go long, okay? So what eventually happen, you buy here, there's a breakdown here, and then the price goes down. There's a breakdown here of the flag pattern, right? So this is a failed trade. Okay, so for new traders, if they cannot recognize there's a bear flag pattern, they will jump into buy here because they expect that the price from here can move up to here, right? They expect the price will continue to move up like that, right? So it doesn't happen. There's a bear flag, it will break down, yeah. Okay, a bear flag is just a continuation pattern of the bearish pattern. Breakdown, bear flag, breakdown, bear flag, and then breakdown, right? It's just a continuation of the downtrend, right, of a bear flag, right? This is a bear flag, right? Okay, this one, yeah, this is the pattern. Okay, the next one is hit and cup and handle, all right? Cup and handle. Cup and handle was defined or discovered by this guy, William J. O'Neill, right? It's a very famous technician who invented a lot of technical indicators in 1988 of recently, right? Invented this cup and handle pattern, yeah. So it's a round bottom, and then there's a pullback here, and then there's a breakout here. Okay, so you observe some of the stock chart with the cup and handle, this kind of round bottom support with a pullback. This is the area you want to notice. If there's a breakout, then the price can continue to move up higher. Okay, it's a reverse cup, right? If the reverse cup like that, then it's bearish. Okay, the resistance is pushing the price downwards, right? In a reverse manner like that. Diamond shape also got all this. Diamond shape is not so reliable. Just another pattern. Other shape I won't explain all this. animal shape also got a crab on a chart one, right? It's a butterfly, it can be a bullish. To me, it's just another sort of pattern, right? So you can refer all this. Right, so you can refer this PDF, right, for revision to understand the support resistance. Okay, so most important is with the help of the BMS indicator, right, we don't really have to draw the lines or this thing. Okay, with the BMS indicator we can trade the market much easier with the signals. Okay, with all the dynamic moving average line as the support resistance is plotted on the chart. Okay, when with other indicators to help us to trade much better. Okay, with signals, all these signals. Okay, so it's very easy to understand the signals, right? As long as there's a rocket fire arrow pointing up, there's all these are bullish signal. Green candle, they are bullish signals, right? As long as there's a purple arrow pointing down or red pointing down, right? These are the bearish signal, the sell signal. Okay, that's it. This is a buy and sell signal. It's nothing complicated on the chart. The more you look at the chart, right, you install the BMS indicators, the more you will familiarize with the system. Okay,